For more on the economy, let's bring in Stephen Cates. He is a Bankrate financial analyst. Welcome to the show.
Thank you.
Now, the latest CPI report showed inflation ticked to 3% in September, marking the highest reading since January. What are the key factors driving this increase, and which categories like housing, energy, or food are putting the most pressure on prices?
So energy was a big factor in the increase for headline inflation, which is the average of all the prices categorized. That was one of the major factors. We did see other categories also rising. There was a few things that did go down though, and I think more importantly, to focus on things like shelter, which actually had one of its smallest increases month over month since 2020. That's a major turning point because it is demonstrating the fact that some of the lower rental prices and the cooling price increases for single family homes is starting to enter into the CPI data, and that's reflecting a little bit of the reality that we're seeing out there in the real estate market.
The Federal Reserve has been targeting a 2% inflation rate for some time. Given that inflation remains above that goal, what options does the Fed realistically have heading into next week's meeting, and do you expect another rate cut?
I do expect a rate cut. I expected one before this CPI report. I think this being a little bit cooler than everyone expected really cements the fact that we're likely to get this cut. The Fed's made it clear that they have meaningfully pivoted towards trying to protect the labor market and the economy through rate cuts. And I think that there's really no turning back at this point. I don't think that, despite the fact that we have not gotten any labor data because of the government shutdown, they're likely to pause due to that lack of data. I think they're going to assume that the labor market has not had a miraculous recovery in the last month.
Many Americans continue to feel squeezed by the cost of living, even as overall inflation is far below its 2022 peak. How do these new numbers translate to what consumers are experiencing day to day?
I think a lot of consumers are still anchored to some of the prices that they remember from a year or even a few years ago. And unfortunately, we're not going to go back to those prices. But it doesn't change the fact that many people feel squeezed and that their budgets are kind of hitting the wall. Ultimately, consumers are feeling the pressure of falling, smaller increases to their wages, but still increases to prices. And that's hurting things. The people who are able to go out and spend the most are the people who are at the top of the income thresholds. And the rest, basically anybody who's in the bottom half of the income threshold, they're feeling increasingly difficult times and increasingly difficult to pay for the things that they need to.
Stephen Cates, thanks so much for your insights.
My pleasure.